Hello everyone, it's Wednesday, September 3. Today we're analyzing the euro and British pound charts to assess potential market trajectories. Both currencies posted steep losses against the US dollar yesterday. Since the start of autumn, demand for the greenback has revived, even though strong fundamental drivers. The move was not about weakness in the euro or sterling. It was about broad-based dollar strength. On Tuesday, traders digested Eurozone inflation data. The consumer price index came in slightly above expectations at 2.1% in August, following 2% in both July and June. This suggests that the European Central Bank is unlikely to keep cutting interest rates. To some extent, this prospect could weigh on the Eurozone's economic growth and may have been an additional drag on the euro in early trading. Later in the day, the focus shifted to US data, particularly the Institute for Supply Management's manufacturing PMI. It was expected at 48.9 but printed at 48.7. While higher than July's reading, it remained below the 50 mark, signaling continued counteraction in manufacturing activity. The release sparked a burst of volatility, with bulls attempting to seize control of the market. However, their efforts fell short, and the euro-dollar pair came under renewed selling pressure, sliding to a one-week low. Now let's turn to today's macroeconomic calendar, which is relatively busy. In early trade, the spotlight will be on services and composite PMIs from the euro area and its member states. The Eurozone's final services PMI is expected at 50.7 for August, with the composite index at 51.1. Both are forecast to remain unchanged from preliminary estimates. Stronger than expected readings could help the euro claw back some ground against the dollar, while in-line or weaker figures would likely keep the currency under pressure. Attention will also center on ECB President Christine Lagarde's speech. Markets will parse her remarks on the latest inflation data. Any signal of holding rates steady at the next ECB meeting, combined with hints that the easing cycle is nearing its end, could briefly support the euro. Under normal conditions, this would be positive, but with inflation still elevated and growth weak, such a stance effectively rejecting further economic stimulus, might instead trigger renewed selling pressure. So, it would not be surprising if the euro extends losses after Lagarde's statements. The UK will also release services and composite PMIs today. The readings are expected to be upbeat, which could offer some support to sterling. Traders will further watch the Bank of England's Monetary Policy Committee hearings for additional clues. In the US, the calendar features job openings, factory orders, and a speech by third member Neil Kashkari. Lately, policymakers have increasingly leaned toward rate cuts, winning on the US dollar. Still, given yesterday's dollar rally, the greenback may extend its gains today, so caution is warranted when considering short positions. Turning to technical analysis, the 1-hour EUR USD chart suggests that a false breakout at 1.1628 following strong Eurozone data would trigger a buy signal, driving the pair toward 1654. A breakout and firm consolidation above these levels could extend gains to 1682, potentially opening the path to 1.1713. At these levels, short positions on the rebound would look justified, targeting an intraday correction of 25-30 pips. Short entries at 1654 and 1682 would be relevant in case of a false breakout. In a bearish scenario, if the price remains below 1628, the euro could slip to 1604 and possibly extend weakness to 1.1576. At this mark, it would be wise to go long on a rebound, aiming for a corrective move of 25-30 pips. Going long at 1.1604 and 1628 would only be prudent if a false breakout occurs. Speaking of the British currency, market volatility has picked up. Yesterday, sterling briefly lost more than 200 pips, so traders are likely to be more cautious with long positions today. A false breakout at 1.3341 would generate a buy signal, potentially lifting the pound-dollar pair to 33.93. A breakout and consolidation above this level, supported by upbeat services PMI data, could extend gains to 1.3431 and possibly 1.3469. At the level of 34.69, I would recommend going short on the rebound, targeting a 25-30 pip pullback. Short positions at 1.3393 and 34.31 would be valid in the case of a false breakout. For bears, the key target is 33.41. A break below this level could send sterling down to 1.3315 with further downside toward 32.82. At this level, long positions on a rebound would be advisable, aiming for a 25-30 pip correction. Long entries at 1.3315 and 33.41 should only be considered in the event of a false breakout. Best of luck to all.